Hello there. Welcome back to Financial Accounting Info. Today, we want to look at a question paper, the recent question paper of November 2023, and we are going to look at question 2 on that question paper. So our question is here. It read, as a junior bookkeeper, you are supplied with the relevant information of Bonang traders for the year ended 31 December 2021. Then on the required parts, that is first part 2.1. So we are only going to look at the first part there, that is 2.1, on the preparation of statement of profit and loss. So 2.1 reads, prepare the statement of profit or loss and other comprehensive income for the year ended 31 December 2021. So very important when you are reading the question in terms of where the year is starting and where it's ending. It's very, very important. So here we are going to see as we do the calculation that the financial periods of 1 year is you are supposed to know where it's starting where it's ending. So this financial year is ending on 31 December 2021. It means it's starting on 1 January 2021. Then it goes to end on 31 December 2021. So very important for you to put this down before you start to answer the question, because it will help you on the calculations, given the additional information, some adjustment that needs to be done there. So this is what we have. So if you go to our answer section, see that this is our statement of profit or loss that we have there. So on our statement of profit or loss, remember we are going to start with the figure for revenue. We are going to start with the figure for revenue. So you see that this is our statement of profit and loss and other comprehensive income for the year ending 31 December 2021. So we have our 31 December 2021 there is our heading. So with that now, we can now start to answer the questions on the first part. There we have our revenue. So we have got our revenue there at the beginning. So we are going to the question to check which figures do we have for revenue. We go to the list of balances there. You see that we have our revenue stated there. If you come here, you'd see that this is our revenue under the nominal account section. We have got revenue of 206,850. But before you enter that revenue, you try to see if you have got some returns in terms of sales returns that are there. Then if you go down, you'd see that we've got sales returns there, 3,625. So our revenue is 206,850. Then we have got sales returns, 3,725. Remember, when there are sales returns, they are going to reduce the amount of revenue because these are goods that have been returned. So it means they are no longer part of our sales. So we need to subtract it. We are going to subtract this one, 2,725 from 206,850. Then we check if there are other adjustments that are going to affect sales. You go down with the figures that you are given there. You'd see that you also have a settlement discount granted. This one of 3,270. So we also need to subtract this one. Remember, settlement discount granted is a discount that is given to customers who have paid their amount dues early. So we are supposed to subtract it from the figure for revenue so that we get the net figure. So basically, we are going to say 206,850. We subtract our sales returns, which are 3,725. Then we subtract again the settlement discount granted, which is 33,207. So we are just going to do as such on the answer section. So we go there on the answer section. So here now, we just make a summary in terms of the calculation. We are just going to make a summary in terms of the calculation that we are having there. Remember, we are saying 206,850. Then we subtract 3,625, and then we subtract again 3,270. So having done this now, we can now calculate. So if you calculate correctly there, you're going to get 199,955. So this is the figure that we have there. Then after revenue, we are now going to the section of less cost of sales. Here we've got less cost of sales. So remember, we are going to calculate the cost of sales beneath that, whereby we're going to start with opening inventory, then we add our purchases. We see if we've got some carriages or custom duties. If they're there, we add them there. Then finally we subtract the closing inventory to get our figure for cost of sales. So we are going to start with the opening inventory here. Right, this is our opening inventory. So we go back to our list of balances to check the figures for inventory that we have. So if you come here, you'd see that for opening inventory, we have got our inventory there on our list of balances. We can check where we have them. So you see that we've got inventory here, which is 22,930. So we are just going to put inventory such 22,900 and 22,930 as our opening inventory. So we come here, so we are going to put our open inventory here as 22,930. And obviously, after opening inventory, we are supposed to add purchases. Here, we are supposed to add our purchase figure. But remember, this purchase figure also is some returns. If there are purchase returns, we are supposed to subtract them there so that we get the correct figure for our purchases. So we go back again to check what figures do we have in terms of purchases. Right. We come here, we see that purchases is here. We've got purchases here, which is 71,750. We check for purchase returns there in the question. You go down to see if we have got any returns that are there. Right. We go down. We can check if we've got purchase returns that we have there. Purchases returns. We only have our settlement discount received, which is 285, is going to reduce the figure for purchases again. So we're going to subtract 285 here. Remember, these are discounts that are there on purchases, so which means that the purchase amount is also going to be reduced. So we subtract 285. Then we see that we've got no purchase return that we have in the list of balances. We go and check on additional information if you have got anything to do with purchases returns. So if you come here, let's try to see there. We can just go down, checking if you have got anything that is affecting our purchases. Right, we go to the first part there, that is additional information number 1 here, saying trading goods of 415 rands were retained during this financial period. These goods were included in the inventory end as mentioned above, but no other entries were made. So we've got some returns that we have here, which is 415. So we're going to subtract again 415. So we go back there to see what adjustments are we going to do. Remember, the figure for purchases is 71,750 here, and then we subtract the figure for settlement discount received 285 plus the one for returns, which is 415 that we have discovered in the additional information. So we come here, we just summarize that working for purchases. So we are now here, so we can just summarize it there in brackets. So we are now saying brackets. I remember we have the figure for purchases 71,750. And then we subtract 285, and then we also subtract 450. So if you calculate this correctly, you are going to get 71,050. Right. Remember, the formula we are saying, we say opening inventory, we add purchases. We've got our net purchase figure there. Then also we look for any carriages in terms of purchases. Carriages on purchases also, we are supposed to add them there. And then we also check if we have got some custom duties. So we go back to the question to see if we have got such items so that we can include them then. Right. We come here, we see that we have got custom duties that is clear here. Custom duties, we have got 5,200 there. And then we check again if we have got anything to do with carriages on purchases. We have carriages on purchases again there, 400 and what? Carriage on purchases 495. So we're going to put carriage on purchases 495, then customs duties, we've got 5,200. But you can also check on additional information. We have got any adjustment that are affecting these figures. So you'd see that on additional information number 2, customs duties of 275 rands were outstanding for November and December. So we have gotten outstanding. So this is an accrual. Remember, according to the matching principle, when we have an accrual, we're supposed to add that amount because it belongs to this period. A matching principle is very simple in this expression, as it says what belongs to this year should be recorded this year, and what doesn't belong to this year should not be recorded to the current financial year. So this is what we have. So we are going to add our 275 for outstanding custom duties to the figure for custom duties that were given in the list of balance, which is 5,200. So we go to the other section and just present it as it is. So here now, remember, we have got carriage on purchases. The figure for carriage on purchases, remember, is 495. Then we also have our customs duties. Right. Then customs duties, remember, we've got an accrual that is there that we need to add there. So the figure that we are given in the list of balances, 5,200. Then the accrual amount is 275. Right. If you add correctly there, you're going to get 5,475. So this is what we have. So this marks the additions that we are making to opening inventory. Then we can add now to get the total. So we are now saying 22,930 plus 71,050 plus 495 plus 5,475. Then the figure that we are going to get there is 99,950. So remember our formula for cost of sales, we are supposed to subtract our closing inventory there. So we are now saying less closing inventory. So remember in our financial statements, whenever we say less, we are subtracting. So this is an indication of a subtraction. So we are now saying 20,000. If you go back now to check the figure for our closing inventory, we can always get the figure for closing inventory in the additional information. Remember, in the list of balances, the figure that will be given will be for opening inventory. So closing is on additional. We are seeing it item 3. So we are only taking the figure for inventory. The figure for packing material for our inventory, closing inventory, we don't include it in the calculation of cost of sales. We only include it in the balance sheet, remember, under current assets. We are going to add it for get the total inventory that is there on hand. We add packing material balance plus the inventory figure to get the total. So the packing material is not part of calculation of cost of sales. So we're only going to take 20,995. So that's our closing inventory. So here now 20,995. So remember we are subtracting, so we can show by putting brackets there. So now we finished the formula for calculating cost of sales. We can close and calculate there. And obviously the figure that we are going to get for cost of sales is going to come up here in line with cost of sales. We put it here. So we are now saying 22,930 plus 71,050 plus 495 plus 5,475. Then you go to our 99,950. Then you subtract 20,995 there. Then if you calculate correctly there, you are going to get 78,955. And remember, we are also saying less here. So we subtract, we put our brackets. So this is what we have. So we now say remember, we now want to find the figure for gross profit. So gross profit, basically the formula is a revenue minus cost of sales. So our revenue is here, 199,955, subtract our cost of sales, 778,955. So let's try to calculate correctly there. we calculate, we are supposed to get 121,000. So here we have got 121,000. And remember, the description that we have there is gross profit. Right. After gross profit, remember you have to look for other income that can be there. So here we are saying add other income. What falls there is our other incomes. If you have got, for example, rent income, we are supposed to put them there. And any other income, maybe in the form of the provision for doubtful debts or credit losses adjustment. If it's a decrease, if it's a decrease of provision for doubtful debts or provision allowance for credit losses, we put it the year under other income. But if it's an increase, we are going to put it under less expenses. So we are going to pick the other income that we have there in the question. Go back. Go back on the list of balances and try to go through, remember the nominal account section. We go there to check if you've got other income there that we have. And check there if you have got any other income that we have. Right, we have got credit losses are recovered. Credit loss recovered. So what does it mean? It means these were debtors that were written off. They were written off and classified as credit losses before, but they've paid the amounts that were written off. So when they paid them back, it becomes an income in the form of credit loss recovered. Remember, these were doubtful debts that we said we are no longer expecting any money from them. So we wrote them off. So after writing them off, they came back again and paid their amount. So we now classify it as income. So we've got credit loss recovered 900. We have got 940 there. So we can just go and include that one. Credit loss recovered. So here we're saying credit losses recovered. And what are we saying there? We're saying the amount is 940. And then we check again if you have got any other income that is there. So we are checking in the list of balances there. Then we refer to additional information if it's necessary, right? If you check there, you'd see that. Let's try to see if we've got any other income. Right, we've got rent income is the last item there in the list of balance, 6,000. This is rent income. It's here, 6,000. It's part of our income. Then we check on additional information. If you've got adjustments of rent income, remember we might have in a accrual or a prepayment which needs to be adjusted. So if you come here, you would see that item 4 on additional information is saying rent has been received up to 30 June 2021. Right. Remember the financial year, we stated the financial year at the beginning of the question there. We can go back and refer back. We have with our financial year starting on 1 January 2021, ending on 31 December 2021. So the rent was paid up to end of June 2021, which means how many months do we have there? You can use your number line there to count your months that were paid. So we are saying the rent was paid from 1 January up to end of June. So how many months are there? We can count January, February, March, April, May, June, July. Sorry, we are ending on June. So we have got these ones 1, 2, 3, 4, 5, 6. So we've got 6 months. So what does it mean? It means another 6 months was not yet received. So it means the figure that we are given for rent income in the list of balances is equivalent to 6 months only. So the other 6 months we have not yet received. So it's an accrual of an income. So we need to add the other half again. So if you look there, the figure that we are having in the list of balances is 6,000. So it means the other 6,000 is not yet received. So you are supposed to say 6,000, then we add the other one that has not yet been received, 6,000, then get your 12,000. So we go there to the rent income and just present that adjustment. Right, here now we are saying rent income. So we are saying 6,000, then we add another 6,000. then the total that you get there is 12,000. Right. So this is what we have. So this is all the incomes that we have. If you recheck again in the list of balances, we don't have another income. So we are adding the two, get the total for other income. So you say 940 plus 12,000. Obviously, you're going to get 12,940. As simple as that. Right. Now we add our gross profit 121,000. We add our other income 12,940. Then the total that you're supposed to get here is 133,940. And remember the description. This description of we are now adding other income. We are saying it's now this is now the gross income for the year. This is the description that we are putting here, gross income for the year. Right. With this now we can now move down to see what we can adjust next. Remember, after gross income for the year, we are supposed to go to less distribution, administrative, and other expenses. So we come here, as simple as that, we put the heading, less distribution. These are general operating expenses that we are describing, distribution, administrative, and other expenses. So we are going to list them beneath this heading, and then the total we add, when we add all the expenses that we are going to list there, the total is supposed to come in line here with the figure for with the description for distribution, administrative, and other expenses. We put it here, right? So we are going to pick them in the list of balances. We go to the nominal account section and pick them one by one and try to see if they've got adjustments, and if they are there, we adjust. Right? We go there. This is our nominal account section. So we are going down, checking any operating expenses that you can see there. Remember, we have carriage on purchase and carriage on sales. Carriage on purchase, we said we are supposed to adjust them in the trading account or under the calculation of cost of sales, and we have already included this one. But carriage on sales goes under the operating expenses. So we are saying carriage on sales 533. So we're going to put that one, carriage on sales 533. Right, we are here, we are saying carriage on sales. And we've got 533. Then we go back again to check if we have got any other operating expense. After carriage on sales, we've got credit losses. Credit losses 4,077. Remember, credit losses, we said these are bad debts. These are debtors that are owing us, and we are saying we can no longer receive those amounts, maybe due to many reasons. Maybe the person is died, the person is moved out of the country, the person is completely bankrupt, so we cannot never expect any money from them. So we've written them off, so it becomes an expense. So we got 4,077. But remember, in the additional information, we have something again to do with these credit losses. We check which one. Check down there. We are on item 5 is saying an additional amount of 350 must be written off as irrecoverable. So it's part of also credit losses. So we are supposed to say the 4,077 that we have in the list of balances, we have this 350. We get the total for our credit losses. So we come here. We are now saying credit losses. Credit losses, we are now saying 4,077. Then we add the 350 on additional information. Then if we add the two, we are going to get 4,427. And we're going to check which operating expense do we have next. We just go down the nominal account section. We are here on credit losses. This credit loss recovered, we adjusted it under the income. Custom duties, we adjusted. Interest on loan. Remember, interest on loan, we are supposed to adjust it after we have calculated the net profit, so we can leave it. Packing material, right? This can be an expense when you buy this packing material. So what it means is this figure that we are given of 475 represents the total packing material that was bought. Then we check if we have got any packing material at the end of the year. If we have any packing material on hand at the end of the year, we're supposed to subtract the figure for end of year minus the total that was bought to get what was used. What was used is the expense that we want to include in the statement of profit and loss. So we have packing material, which is 475. You go down to check on additional information. If you've got packing material at the end of the year, we'll see that we have 125 packing material. So it means this is what remained at the end of the year. So we want what was used. So we are saying the 475 that we are having in this balance minus this one 125, then we get the one that was used. Then that one is an expense. So as we are going to do a search there in the answer section. So here we are now saying packing material. Right, in brackets now we are saying 475, remember. Then we subtract 125. Then if you do that, you are going to get 350. Right, this is our expense for packing material. Then we can go again to check what we have next after packing material. Right, if you come here, you'd see that we have got salaries now, which is 34,500. But we go to the additional information again to see what do we have in terms of salaries. If you go to item 6, they're saying salaries were paid for 10 months only. And then on 1 November 2021, salaries were increased by 10%. So what does it mean? It means the figure for salaries that we are given there in the list of balances represent 10 months. And then we are left with November and December. They were not yet paid. So there is an accrual that is there. But then also in November, these salaries were increased by 10%, which means the figure that we are going to get that was being paid from January to October, is the figure that was not yet increased. Then after the increment, we are going to adjust for that. So we go there in the list of balances. We check the figure for salaries that we have. It's 34,500 here. And remember, this is representing 10 months. You divide by 10, you get 3,450. 3,450. Right, this is for before the increment. And then after the increment, now we are now saying 3,450. We multiply by, remember, it was increased by 10%. So if you say 100% plus 10%, you get 110%. And if you convert it to a decimal, that is, you divide it by 100%, you get 1.1. So you're just going to multiply by 1.1 here. 3,450 times 1.1. And then if you get that figure that you get there, it's now going to be the figure for 1 month after increment, but we want 2 months. So the answer that you are going to get here, you multiply by 2 months to get the total of the accrual. Then that total we add to the figure for salaries. Remember, the figure for salaries is 4,500. So if you do that, there, you are supposed to get 7,000. If you multiply this one, you're going to get 7,000. Let's see. Let's try to calculate it. 7,590. 7,590. So this is what we have. So we are just going to say 34,500, the figure for salaries, this one, and then we add 7,590 to get the total for salaries for the year. So we are now here. We are now saying salaries in brackets is 34,500 plus 7,000. 7,000, remember 590. And then if you add the two for salaries, you're supposed to get 42,090. 42,090. So this is what we have in terms of salaries. We go back again to check what do we have after salaries. We have got settlement discounts granted. Settlement discount granted. Remember, we adjusted this under sales. We adjusted this under sales when it reduced the figure for sales. We leave it. Settlement discount received again. We adjusted it. We have got stationery now. Stationery now is also an expense. So what else we are going to do is the figure that we have in the list of balances again, like what we did on packing materials, represents what was bought, and we check on additional information if we've got stationery that was selected and not there. If it's there, we subtract it from the figure that we have in the list of balances to get the one that was used. So we go there, you'd see that we do not have anything about stationery on inventory on the end at the end. So it means all what was bought was used, and then that one automatically becomes an expense. So we have got stationery here, which is 2,250. So we are going there and putting 2,250 for stationery. Right, here we are saying stationery, and it's 2,250. So this is what we have, and then we go again, check in other expense. Right, after stationery, we've got sundry expenses. Sundry expenses 16,830. We check additional information if we have got anything to do with sundry expenses. Right, item 7, the sundry expense account includes an amount of 5,772 for an annual bonus which was paid up to 28 February 2021. So this was paid up to 28 February 2021, and remember our financial year is ending on 31 December 2021. So it means we have got January and February that is inside this 5,772. So we need to remove it since it doesn't belong to this year. Like what we were saying, according to the matching principle, what doesn't belong to this year, we don't record it. So this January and February doesn't belong to this year. We have to remove it by subtracting. So 5,772 is representing 12 months because they are saying for an annual, and whenever there's an description of annual, it means we've got 12 months there. So we are going to divide 5,772 by 12 to get the monthly amount of that bonus. So you're saying 5,772 divided by 12. And then we try to see what we get there. Let's try to calculate that one. We try to calculate that one for sundry expenses. When divided by 12, we are going to get 481. So it means let's try to see. We have got 5,772. 5,772. Then we divide by 12. Yes, we get 481. So here is 401. So this is representing the monthly amount. So for 2 months now, which is January and February, we are now multiplying by 2. And when you multiply by 2, you are going to get 962. So it means this 962 does not belong to this year. We are supposed to subtract it from the figure for sundry expenses that we are given in the list of balances. So if you come back, you'd see that the figure for sundry expenses is here, 16,830. Then we subtract that amount, which is 962. So we come to the answer section, and now we are saying sundry expenses. Right, on sundry expenses, we are saying 16,830. Then we subtract our 962. And if you do that, we are going to get 15,868. Right, this is what we have. Then we also have some expenses that we have to take note. We have depreciation. If you go to the additional information, we've got something about depreciation there. Right, on depreciation, we are here on item 8. Non-current assets must be depreciated as follows: vehicles at 15% per annum according to the cost price method, and then equipment at 20% per annum according to the diminishing balance method. So remember, you have to take note of the formulas. But on the cost price method, this is the straight line method. So we are going to say percentage times cost. We are just going to check the cost of vehicles, and then multiply by 15%. It represents the annual depreciation for vehicles. Then for equipment, it's the diminishing balance method. Remember, diminishing, we say percentage times the carrying value. The carrying value, we get it by saying cost minus accumulated depreciation. So this is what we have. So let's start by vehicles. But we have got a notification that is there which is saying a new vehicle 100,000 was purchased on 3rd June 2021. So it means the figure that we have for vehicles, the cost price that we have for vehicles in the list of balances, we have got 100,000 amount of vehicle that was bought in the middle of the year, that is on 3rd June 2021. It means it only stayed 6 months. So we are going to subtract it from the total that we are having in the list of balances and calculate the depreciation separately, and we apportion it to the 6 months that it only stayed. And then the remaining one, we are now calculating for the whole year now, because they stayed 12 months. So we are saying, let's go to the list of balances and check the cost for vehicles. Vehicles, if you come here, you would see that vehicles is 129,420. So we have gotten 100,000 that is inside this figure that was bought during the middle of the year. So we are going to say 129,420 minus the 100,000, then we get the one that stayed the whole year. So we come here 129,420. We are now saying 129,420 minus 100,000. Then we get the one that stayed for the whole year, which is now 29,420. So this one now, we now use the formula. Remember the statement method, we say percentage times cost. So the percentage that you are given for vehicle is 15%, which is 0.15. Then we multiply by 29,420. So the figure that you are going to get there represents the percent for the one that stayed for the whole year. So we're not going to apportion it in terms of the number of months that it stayed, because it stayed 12 months. So you calculate it there, you're going to get 4,413. So this is the one that stayed for the whole year. So you're going to take it as it is. Then the ones that stayed only 6 months for 100,000, we are now saying 0.15 times 100,000. And then we get the annual, but this one stayed 6 months. So we are going to multiply by 6/12. Then we get the apportionment in terms of the month that the vehicle stayed. So you calculate that one, you are going to get 11,913. 11,913, if I'm not mistaken. Let's try to see, get 7,500, sorry, 7,500 here. Then the total depreciation now for vehicles, we are now saying 4,413 plus, sorry, we've got plus there. Here, then we say plus 7,500. So you add the two, you are going to get now 11,913. So this is depreciation for vehicles. Now we go to the next one is equipment. Equipment is 20% using the reducing balance method. So we are just going to say, come here and calculate for equipment. So for equipment, remember, for equipment, you see reducing balance, which is diminishing balance, we say percentage times carrying value. Of which carrying value, we find it by saying cost minus accumulated depreciation. So let's start by finding carrying value. Our cost for equipment is 76,000 here, and then our accumulated depreciation is here, it's 11,600. So we're saying 76,000 minus 11,600. So when you calculate that one, let's try to see. Let's try to see there. Right. We calculate that one, 76,000 minus 11,600. Let's try to see what do we get there. 26,000 minus 11,600. We are going to get 64,400. So this is our carrying value, 64,400. And now we say percentage. I remember the percentage is 20%. So 20% is 0.2. So 0.2 times 64,400. You multiply that one. Let's try to see. We are now saying 0.2 times 64,400. Get 4,880. 4,880. The amount for depreciation that you get for equipment. So we are going to add the one depreciation for equipment plus the depreciation for vehicles to get the total depreciation. So we are saying 4,808, and then we add the one that you got for vehicles, which is 11,913. Then we get the total for depreciation. So we come on the answer section. We are now saying depreciation Right, in brackets, we show the working 11,918 plus 12,880. Right, you add the two, you add the two there, you're going to get 24,793. Right, so this is what we have. And also, we go and check again another adjustment. Remember, we said we are also supposed to adjust for allowance for credit losses, but we said this allowance for credit losses can fall under other income, or it can fall under our expenses or operating expenses, depending on the position of the allowance for credit losses. If there's an increase whereby we are comparing the allowance for credit losses for the previous year, we compare it with the current year. If there's an increase, it's an expense, and we put it under the operating expenses. But if there's a decrease, it's in the income, and you are supposed to put it under other income. So we are going to calculate it and see what's happening, and compare it with what the figure that we had for the previous year. So we are having 5% here as our allowance for credit losses of trade and other receivables. We have 5% here. So we are going to check the amount for trade and other receivables in the list of balances, and then we multiply by 5% to get that amount. Then here we are saying the figure for trade and other receivables is here for under trade receivables control. 21,350 is the figure. 21,350. But on additional information, remember there is some trade receivables that were written off that we need to subtract first. On additional information, we have something about that on item 5. An additional amount of 350 must be written off as recoverable. So we are going to subtract it from the figure that we are having there, and then multiply by 5%. So we are saying the 1,350, then you multiply by, you subtract 350, and then you multiply by 5%. So we are saying 0.05 is 5% as a decimal. We multiply by 21,350, then you subtract 350. So show it in brackets like this. Calculate that one. Right, if you calculate like that, you're going to get 1,050. Then this figure, you don't put it as it is, you compare it with the previous year's figure for allowance for credit losses. We go to the list of balances. You are supposed to get it under the balance sheet account section here. You go down, check for it. You see we have nothing there. It's supposed to be here. So if it's not there, it means there was no provision for the previous year. So we regard it as zero. We regard it as it was zero for the previous year, since we are not given there. So we are saying it's a movement from 0 to 1,050. So this is an increase. So this increase is an expense. So this is an increase, and when it's an increase, it's an expense. And as we said, when it's a decrease, it's now an income, and it's supposed to be under other income. So this one is an expense here. So 1,050. So we are going to put it again under that section for less expenses. So you are saying allowance for credit losses. Allowance for credit losses. Then in brackets, we just summarize the working. Right, in brackets here, we are saying, brackets, we said we got it by saying 0.05. We multiply by 21,350 minus 350. Then we got 1,050. So this marks the end of our expenses. Then we are supposed to add them, get the total, so we can just close it. And again, we close on top, we add everything that is inside that box. We close again here. We add everything. You are supposed to get 91,361. And remember, we are subtracting, so we put brackets. So this is what we have. And then after that, now we are going to say gross income minus this list, minus the distribution, administrative, and other expense figure, which is 91,361. Subtract there 133,940 minus 91,361. And to see what we get, the answer that we are getting, we are supposed to put it down here. Yeah. So we are saying now the answer that we are getting there is now let's try to see what answer we're getting there. Let's see. Right. We calculate, let's try to calculate that one. We have 133,940 and to subtract 91,361. Get 42,579. 42,579. So we are putting it here. 42,900 and 579, sorry. 579. So we subtract this figure is our net profit. Then after that, now we are supposed to adjust for the finance cost. So we say less finance cost. That's where we're going to put our interest. Less finance cost. So for our interest now, we are going again to the question to check what information do we have in terms of our interest. We can go down here. We see that the issue of interest on item 10 provided for the outstanding interest on the loan. The interest rate on the loan from Sambao Bank was increased by 2% on 1 July 2021. So what does it mean? It means from 1 January to 30 June, it was 2% less, and then it was increased by 2%. So we check now, we check now in the list of balances the information that we are given in terms of loan. If you come here, you would see that loan is here. It's saying loan for this bank is 18% per annum, which is 47,500. So what does it mean? It means before it was 18% minus 2%, which is 16%. For the first 6 months, it was 16%. Then for the last 6 months, it was 18%. So we are going to calculate interest before it was increased and after it was increased. So what we are going to do is we are going to say, let's just calculate it with 47,500 as our interest. So remember, before it was increased, it was 18% minus the 2%. Then you get our 16%. So this is before. For the first 6 months. We are saying now 0.16 times the figure for loan that we have, which is 47,500. And this was only for 6 months. So we multiply by 6/12 to get before it was increased. So you calculate that one. You're going to get 3,800. 3,800. This is before interest was increased. Then after it was 18%, so you're going to say 0.18 is 18% as a decimal, times 47,500. Then you multiply again by 6/12 because it was also 6 months there. Then you calculate it correctly there, you're supposed to get 4,275. So for the total interest, you are now saying this one plus this one, 3,800 plus 4,275. Then you get your total for interest. So you can just go in and summarize that one on the answer section. So we are now on interest. We are now on interest on loan. So we are just going to summarize is 3,800 plus 4,275. And we are going to get 8,075. And this is the only finance cost that we have. And then we are just going to put the total here, 8,075. Right. This is what we have. And then we now say 42,579 minus 8,075. Figure that we are supposed to get there. This one is, we put it in brackets because we're subtracting. Figure that we are supposed to get there is 34,504. So this figure, what do you call it? It's also our profit. So it's our net profit. Net profit after interest expense. After interest expense. Right. This is what we have. And then we check if you've got other comprehensive income. Remember, we might have interest received if there's interest received, it comes under the comprehensive income. But if you check in our question, we don't have such. So we are just going to put a dash, there's nothing. Then if we add this other comprehensive income, we're supposed to add it to 34,504 to get the total. And the total that we are supposed to get there is our final figure, which is now the total comprehensive income for the year. The figure that we are going to get there, total comprehensive income for the year. So this is what we have. And that figure is not going to be affected because we don't have any other comprehensive income. So we're just going to put the same figure here at 4,504. So this marks the end of our question, guys. Thank you for listening. Those who haven't subscribed, please subscribe and share. We are still coming with more videos as we prepare for our June exams. For this video, I'm signing out. We meet again.